Just waiting. Whoa, okay, so I am live. What's going on, you guys? Welcome to the new and improved channel. As you guys can see, it is Wall Street Vibes. So make sure you guys subscribe to the vibe. All right. So I just want to kind of go over everything. What the channel is going to be about nowadays. It's going to be about making smart financial decisions, making investment decisions that are going to be geared towards information that is provided by the government, by what I see on the on the charts, and mind you, I'm not a financial professional, so take everything that I say with a grain of salt, and just use your best judgment. At the end of the day, you always have to do your own due diligence, right? So there's a ton of people that are getting into this space and it's probably oversaturated, but this is something that I'm really passionate about. I've been wanting to get back onto YouTube for quite some time. So yeah, if you guys could just like the video, subscribe to it, and just turn on the alerts, that really helped me out, and share the videos out whenever you guys get a chance. I will be doing weekly live streams. You know, Most of the time it's going to be around this time. Just to kind of watch the market open, and I will have those pre-scheduled out. But again, I appreciate anybody who comes in, and feel free to to hop on the chat, shoot me a text or something like that. One thing I wanted to go over is yesterday we had Jerome Powell. He is the Fed chair, co-chair, and one thing I wanted to kind of discuss today was the how inflation's on the rise and the state of the economy. Interest rates are going to be going up based on what we heard yesterday. I mean, if you were watching the market, one of the primary indicators of how the economy is doing is the top indices, right? So we're talking about the Dow Jones, the Nasdaq, and the S&P 500. So I really, can you guys hear me? Can anybody hear me? Can anybody hear me? Anyways, one thing I wanted to go over is I wanted to kind of show you guys a clip from yesterday, and this was Chair Powell getting grilled, absolutely grilled by Senator Kennedy from Louisiana. So I'm going to go ahead and transition to that, and we will go ahead and start that real quick. So this is probably about 45 minutes into the, into his testimony. And mind you, he is hopping back on that seat today at, I believe it's 10 a.m. Eastern. So in about an hour, he's going to start up. So, he tends to shift the market significantly. And I will show you pretty much like how he shifted the market as soon as he kind of sat in that chair. There was a lot of expected negative talk into what the future holds for the U.S. economy. And if you guys keep up with any inflation data, you know that inflation is back on the rise. You probably are noticing it in your goods. They're they're going up, right? So groceries are at highs. So let's go ahead and get into that clip right now.
Well, and when Congress borrows money to spend even more, that stimulates the economy even more, does it not?
At the margin, yeah.
Okay. If Congress reduced the rate of growth in its spending and reduced the rate of growth in its debt accumulation, it would make your job easier in reducing inflation, would it not?
I don't think fiscal policy right now is a big factor driving inflation at this moment, but it's absolutely essential that we do slow the pace of growth, particularly for the areas of the budget.
All right, let's try to unpack this then. I'm not trying to trick you. You're raising interest rates. You're raising interest rates to slow the economy, are you not?
Yes, to cool the economy off.
And one of the ways you measure your success, other than fluctuation in gross domestic product is the unemployment rate. Is it not?
Yes, one of the measures.
Okay. So in effect, I'm not being critical. When you're slowing the economy, you're trying to put people out of work. That's your job.
Now, one thing here that's very interesting, I'm not sure if anybody has been paying attention, but a lot of large tech companies have started to actually do that. So you had Google, Microsoft, they cut about 5 to 10% of their workforce about a month ago. Okay. One way to slow down the economy is to put people out of work, unfortunately. And because of COVID and all the printed money out there, you have to realize is that COVID, I believe in 2020, we had about 75 to 80% of the money that's in circulation right now get put out into the economy, right? And the hopes was that they were somehow going to stimulate the economy and have spending. Mind you, people went and bought unnecessary shit, which is, Louis Vuitton bags and things like that, TVs, stuff that they don't need, instead of like applying it or investing it back into the market to try to, generate some type of secondary income. But that's typically what you have to do. So you have to raise interest rates, so things have to become more expensive, and that's in order to maintain and slow down spending, right? So people have less money to put into the economy. Obviously, our GDP, we've grown at a ridiculous rate over the last 2 to 3 years. And then, if you go back even further and we're looking at the 2008 recession, right? We've been on a 12-year, 13, 14-year uptrend in terms of that. So, and we've had very little pullbacks in the economy, right? So something like that is not what you really want to see. You want to see slow, steady growth. However, we've been on a consistent uptrend for the last 12 years, ever since the housing crisis, right? Now, again, he's saying here that, you got to put people out of work, right? So that's another way to slow the economy down, is because you're not seeing much growth in companies. You're not seeing growth in the economy. That's another way to slow down spending, right? That's to tame inflation.
Is it not?
Not really. We're trying to restore price stability.
No, you're trying to raise
not wages.
You're trying to raise the unemployment rate.
There are
I know you don't like the phrase, so let me strike it. You're trying to raise the unemployment rate, are you not?
No, we're not trying to raise it. We're trying to realign supply and demand, which could happen through a bunch of channels. Like, for example, just job openings.
All right, let me put it another way, okay? The Economist did a wonderful study. They looked at 10 disinflationary periods in America going all the way back to the 1950s. Disinflation is what you're trying to do. It's a slowing in the rate of inflation. Am I right?
Yes.
In other words, prices don't go down, they just don't go up as fast. Deflation is when prices actually go down. You're trying to achieve disinflation, are you not?
Yes, we are.
Okay. Based on history, in the 10 times.
And again, what did he just say? You're trying to achieve disinflation, where prices don't go down, they just don't go up as fast. Meaning it is a slow stair step. Imagine going up 4 or 5 flights of stairs with inflation, right? So in reality, inflation is probably much higher than what we've been told. Mind you, again, if you've kept up with any of the economic data that's out there, they have changed how they calculate for inflation. So it used to be a base year plus the year before that. Now they're just going based off of the last year. Now, if you follow this, again, if you're following what inflation is doing, you know that we have hit a 40-year all-time high just last year in inflation. Okay, now obviously that's not good, and inflation is on the rise. They said they had it down, and they like to blow smoke up people's asses, and a lot of the times they have their finger on the pulse, and this is why I have changed the channel around to this, because this is going to help you kind of prepare for any type of economic event that could cause you're wondering why, like, why, why are, oh, here's another thing, but I'll get into that later. But, why are things going up? Why are the prices for houses going up? Why are people unable to pay their mortgages? If one key thing that I noticed, and I'll try to find it where I did, but that may be for another live stream. But the used car market, as you guys know, it went through the roof, right? So people were, I mean, they were selling these used cars at like 10, 20% of their actual value, maybe even 50% of what their actual value was. And now what we're seeing is we're seeing a lot of delinquencies in payments in the used car purchases that were made. So now those are at an all-time high. We have personal debt at an all-time high, credit card debt at an all-time high, and it's just steadily on the rise. All right, a lot of these so-called experts, they already know what's going on. The problem is that by the time you find out what's going on, it's already too late, right? So that's why we keep up with this type of information, because this is going to allow you to fight against that and prepare yourself in advance for anything that goes on within the economy. And so yeah, so let's go ahead and continue, and let's push on with this video, because it is very interesting. Especially, I'm curious how everything is going to set out. Another issue is the debt limit. And I'll get into that here in a bit. But the debt limit is, we're approaching that deadline for it to either be increased. If we have a government shutdown in terms of the debt limit, that is going to send the entire economy down. Okay. So the definition of a recession is having 2 straight quarters of, negative or like declining GDP, right? We've already had that last year. However, I think that, because of the way that they were able to kind of bring inflation down very, slowly, obviously, I don't think they did a good enough job. That's why it's back on the rise. The the only way to achieve that, I mean, goodness, it's just absolutely ridiculous, the measures that you have to do. So I believe that we are headed for the recession, and we could have, I mean, and don't quote me on this, I'm not a financial advisor, but I believe that we could be seeing some dark times soon, possibly even worse than 2008. The best thing about this, though, is that these are great buying opportunities for anybody who's trying to come up in the world, right? So if you're looking at inflation as a bad thing, it can be a bad thing, but if you strategize your way into, let's say, real estate, you start buying real estate up at a very cheap value. If you have credit cards and you're not carrying any credit card debt, I would leverage those credit cards into a real estate business for yourself. Just start, using those as like your initial down payments, max those out, and start putting them out on the market, right? Because once this market bounces, it is going to be a vicious bounce. One thing I really think that in terms of recessions, I feel like they're good for the working class, they're good for the middle class to actually start trying to accumulate some type of wealth. These are absolutely just some of the greatest buying opportunities. And while everybody's fearful, nothing stays down forever, nothing goes up forever, right? So there has to be some type of equilibrium there. Obviously I just said that we were in a, kind of like a 12-year uptrend from 2008 and 13-year uptrend. So the only thing for us to do is just to come back down to find our equilibrium, right? And I really do think that there is going to be a ton of buying opportunities in the real estate market. So I 100% believe it is a smart thing to be cash heavy, right? Don't do any mindless spending, and 100% just start strategizing for how you're going to capitalize on the opportunities that are about to come. If you're looking to buy your first home, I recommend waiting about maybe, if we're going into a recession right now, I would say wait 15 months, 14 months. That's when we might hit a bottom in terms of the housing market, right? Interest rates are probably not good right now, obviously, and the likelihood of you being able to get funding is going to be extremely difficult. Plus, you don't want to lock yourself into a mortgage that is going to have like an 8% interest rate tied to that. Like there's no way. So the increase from, let's say, a mortgage 5-6 months ago was 4%. Now it's nearing 8%. Okay. Let's go ahead and continue here with what Senator Kennedy is grilling Jerome Powell about. Mind you, I'm going to put the link in the chat for if you want to watch the testimony today. I will go over what the S&P 500 did yesterday, just based off of the first testimony that he gave yesterday, which is what we're reviewing right now. Okay. The new one starts probably in about 45 minutes. The market's about to open in about 15 minutes. So we'll go over some charts. I'll kind of show you guys some supply demand zones. I trade options, and I'm not like a guru, right? I don't claim to be. This is just something that I really enjoy, right? And I feel like this is the type of information that people really need to know.
That we got inflation down, disinflation, since the 1950s. In order to reduce inflation by 2%, unemployment had to go up 3.6%. Now that's history, is it not?
I don't have the numbers in front of me, but yes, the standard has been that there have been recessions and downturns when the Fed has tried to reduce inflation.
Now, right now, the current inflation rate is 6.4%, and the current unemployment rate is 3.4%. Now, if history is right, I'm not asking you to again, blame anybody, but if history is right, unless you get some help, in order to get inflation down from 6.4% to, let's say, 4.4%, and the unemployment rate is going to have to rise to 7% based on history.
That's what the record would say.
Okay. And to get inflation down to 2.2% based on history, an immutable fact, unemployment would have to go to 10.6%.
10.6% for unemployment. Can you believe that?
That's what the record shows.
That
That's
is
what the history shows.
It's mind-boggling.
I don't think that kind of a number is at all in play here.
I know you're reluctant to admit it, and you don't want to get in the middle of a policy dispute. But I think it's undeniable. It's undeniable that the only way we're going to get this sticky inflation down is to attack it on the monetary side, which you're doing, and on the fiscal side, which means Congress has got to reduce the rate of growth of spending and reduce the rate of growth of debt accumulation. Now, I get that you don't want to get in the middle of that fight. But the more we help on the fiscal side, the fewer people you're going to have to put out of work. Isn't that a fact?
Dial pad has
Okay, and so he's talking about putting a ton of people out of work, right? And to get people up to, I mean, can you imagine that? Like 10.4%? Like that is absolutely ridiculous. And here's one stat: for every percentage point of unemployment, 1 second, sorry about that.
Inflation. Am I right?
Let's go back. Sorry about that,
In other
guys.
words, prices don't go down; they just don't go up as fast.
All right.
Deflation is when prices actually.
So we're going to fast forward just a little bit.
6.4% dispute, but I think it's undeniable.
If you guys are here and you're not subscribed to the channel, I really appreciate it. Again, I'm just trying to bring out the financial news to you guys and, help you guys make better decisions. And
Congress has got to reduce the rate of growth of spending
and how you kind of line up your money, right?
Now, I get that you don't want to get in the middle of that fight, but the more we help on the fiscal side, the fewer people you're going to have to put out of work. Isn't that a fact?
Please answer.
Could work out that way.
Sir?
It could work out that way.
Yes, sir. Thank you.
Thank you, sir. Senator Reed of Rhode Island is recognized.
Thank you very much, Mr. Chairman.
Okay.
Thank you, Chairman.
All right, guys. So what we're going to do now is we are going to transition into the charts here, okay? And I'm going to just show you guys what the S&P 500 is doing at the current moment, right? So we're looking here at the S&P 500. This is this is ES. So these are the S&P 500 futures, right? So a lot of times you can kind of see when you're looking at the S&P 500 futures, those usually operate overnight. And so what I'm looking here is at the daily chart. So this is, each candle represents one day, right? Now this right here was Monday, okay? This is basically what happened when Jerome Powell started speaking. Okay, you see this huge candle. We had a, let's see, from 40.64 all the way down to 398. That is like an $8, 6% down move on the S&P 500, okay? Now we're going to actually move over to ticker symbol SPY, and that is what is currently, that's the ETF, right? Now we're looking at some supply demand zones here. I would think this is going to be, you know, kind of like a buying opportunity here. But again, with Jerome Powell coming up to the podium in about 30 minutes, it is unlikely that we see that happening, right? And, you know, one of the crazy things is, as you guys can see, we're stuck here at this 398.70. We're probably looking at a pre-market gap up. And typically those small little gaps tend to get filled. So I would imagine that we're probably going to head down a little bit further. Another thing that I look for is what some of the moving averages are, right? So some of the key moving averages are the 1348. I always look at them on a higher time frame. I look at the 5 moving average, which is the 5-day moving average. And then I look at the 20-day moving average. So I typically like to use those as good indicators on where, you know, we're kind of trending, right? I don't necessarily read volume, or, you know, I don't read the tape and look at, you know, what some of these orders are, what the order book is looking like, and things of that nature, but I just look at price action, right? So what we notice here is, as of Monday, we had this hard rejection, and anytime you get a hard rejection on one of these candles, you're looking at, I mean, you know, that's telling you that buyers tried to push the price as high as possible, but sellers ultimately took over, right? And so that's basically what happened. Now, one interesting fact here, this is what I'm talking about right here. So we look at the 30-minute chart, okay? And never mind like all these little lines across, but this is the one that I wanted to show you. And it's right here. So from here, they started at 9 a.m. 9 a.m. That's the exact moment when Jerome Powell went and sat in that chair. That's when they started the meeting. This is when this massive sell-off took place, right? And all we did was just slowly trend down for the rest of the day. Now, you know, a lot of the things that Powell had to say was negative. He's saying that, hey, you know, we're definitely going to be increasing interest rates at the next FOMC meeting, which I will cover, which means that inflation is likely going to be higher next week. It comes out on the 14th. And what I'll do is I'll try to go live and make sure that I'm covering that as well. But, you know, if inflation is on the rise, that can only be concerning because now your dollar doesn't go as far, right? Groceries get higher. Energy prices are going up. Like, I can tell you guys just right now, like, my energy bill used to be $140, $150. It's now double that. So just this past month, I paid a $300 light bill, and I don't even use the electricity that much, right? So that's kind of the concerning issue, is that you're overpaying for expenses. Your daily living expenses are just becoming much more expensive, right? So that's why I feel like it's great to understand what the market is doing, understand what GDP is doing, understanding what the Federal Reserve is doing, okay? Also, you want to keep in mind that a lot of events that can move the market is something like the debt limit. And let me get into that. So the debt limit is approaching, okay? And, the deadline to that. And we're going to go right into what Secretary Janet Yellen sent to, basically sent out to Congress, right? And, it's alarming, right? Because what they typically tend to do is Republicans and Democrats, they tend to like kind of let this thing just hover above each other's heads and kind of use it as like an election tactic, right? And this is it's bad for the economy because it's not being taken care of, right? So right now we're sitting at about what, $31 trillion of debt. They want to increase it. So she's sitting here writing this letter to Congress saying, hey, look, like we are looking at like we have to take extraordinary measures in order to keep the government funded and keeping the government running, right? Otherwise, the shutdown, the likelihood, if there is a government shutdown, then the credit for the U.S. could be lowered, right? Their credit rating could get dropped. This could cause like China, who is heavily invested in U.S. debt. I believe they hold something like $4 trillion of the U.S. debt. They could call that immediately, be like, okay, hey, look, like we need that payment now. This could send the entire economy into a complete downward spiral, into almost like a depression type event. Now, 2020, I believe 2020, 2021, I used to talk about, hey, like I believe there's a black swan coming somewhere, and a black swan event is something that's like a depression type event. If you look at what the S&P 500 did from 2010, when it started that bounce after the Great Recession, right? I mean, it's just gone up, and that's not healthy for the economy, right? So she's just saying, hey, look, I'm writing to let you guys know, like, hey, we need to get our shit taken care of, right? And some people that are on this letter that she sent it to, Hakeem Jeffries, House Democratic leader, Charles Schumer, so Chuck Schumer, Senate Majority Leader, Mitch McConnell, who is the Republican leader, and then you have a couple of other people who are on the House committee. You have, ranking members of the House committee, the chair, Senate Committee of Finance, and then so ranking members of the Finance Committee of the Federal Reserve, and also to the to the given leaders of their parties. So this is coming up here pretty soon. So this is one thing to keep an eye on. And mind you, she sent out a letter on January 19th, and she says that here. Look, I noted that I had determined that a debt issuance suspension period began on that date, right? January 19th. Okay, so January 19th of this year was a significant date, right? Because of that. Now, and it will last through Monday, June 5th, 2023. With respect to the Civil Service Retirement and Disability Fund, and that Treasury was also suspending investments of amounts credited to the Postal Service Retiree Health Benefits Fund in accordance with law. Now, one thing about Postal Service workers, they have a pretty decent retirement pension because they're government funded. What do you think that's going to do to them? I mean, imagine that, right? What happened in 2008? Let's go to the chart. 2008, let's look at the S&P 500. Let's look at it let's go from a yearly perspective, right? So let me just adjust this chart really quick. It gets a little funky like that. If you want to know what type of charting system I'm using, this is called TradingView. I have a link down below. If you want to sign up, you get $30 off on your, on your first subscription. They have a lot of good subscription pricing, but yeah. So anyways, all of this is, oh yeah. So this is what's sad. Look at this. This is, all of these candles here represent 1 year in the, 1 year of the S&P 500. What date is this? This is Wednesday, January 2nd, 2008. This is starting from 2008. Here goes 2009, the slow bounce up. We had a decent year, 2011. Then all of a sudden we started getting these bases, up, base, up, base. Where do you see a significant pullback? That's right here, which is 2020. But what caused 2020? What caused the 2020 crash? COVID. Everything everything went down because COVID was coming. The whole world was shutting down. Everybody hide your kids, hide your wives, hide your husbands because they're giving COVID to everybody, right? Um, it still wasn't enough, right? So, I mean, it's not a good situation to be in. So we haven't had like a significant crash like what's going on now, but this is very telling right here because in 2022 we had a significant pullback. However, I don't think it's done. I think we could see some pricing probably as low as $300 in the S&P 500. That would be a proper crash, just to see the economy kind of grow itself back up, in my opinion. So a couple ways to tame inflation is going to be to slow down the GDP growth, right? How do you do that? You put people out of work. The other way is to increase interest rates, which is to stop people from spending money, right? So if people are too busy spending spending most of their money on their everyday living, you need gas to get to work. You need electricity. You need water. You need food, for Christ's sake. If you pay an apartment, you have your mortgage. You have your, if you own a house, you have your mortgage. You have certain fees that are associated with that. You might even have like maintenance fees. You got to get your yard cut, things like that. You got to get your pool clean, whatever, right? If you have children, you have their expenses that you have to adjust for. So, inflation is it's a bad thing. It's a normal thing, but it's bad, right? And at this time of the year, what you should be doing is you should be leveraging yourself and kind of setting yourself up into a period of which once this whole thing happens, once it starts to fall, that you're ready to start buying things up, right? Look for good dividend stocks, some great dividend stocks, right? Do your research. Make sure you're doing your due diligence. Make sure that you're starting to put together a great portfolio of stocks that will pay out some passive income over time. Maybe what you can do also is you can reinvest those dividends back into the same stock. And that's a very possible thing, right? You look at gas prices, they're probably going to rise. Right now they're pretty low, but this is just not a good thing, guys. Okay. And, this is 2008 right here. Up until that, we had this double top here on the yearly chart, but then we just skyrocketed. The only other thing I could think of is we come back down here, test this level, come back and retest, and then we have another 2008 scenario. I'm not a fortune teller. I don't have a crystal ball or anything like that. I can only tell you from what I kind of know from my experience. Another thing is that I have some people who are in real estate, and some of them are developers. They're talking about, hey, cost of goods, cost of supplies are just constantly increasing. We had the PCE report come out and it came out 2 points higher. That is the consumption expenditures, right? So that's telling you that, people are not spending money like they used to. Okay. There was one other thing I wanted to talk about before the market opens, and it actually has already opened. So let's take a look at what it's doing right now. I like to go to the 5-minute chart and basically let's see what it's doing. I would imagine some type of significant move is going to happen the moment Jerome Powell sets up. So see, we had this rejection right there. Look at that. See, so these are key levels right here. As you guys can see, this is a really hard rejection. It's possible that we could come back up to this 400 mark before Jerome Powell gets on the stand and, starts his second day of his testimony. But I'd be looking for some type of, hard pullback. Look at it now. So what I'm probably going to do is I'm probably going to enter a trade, very low risk. But yeah. So I'm going to do a trade here live. I'm actually going to wait for it to develop. I do see that this 1348 could cross up, and it looks like it has crossed up, but it looks like it wants to reject, right? I could see a minor pullback up to this 400 mark. And, this would be a rejection point that I would look for to enter into some put options. I like to trade the S&P 500 options or SPX. SPX is the index. They typically like to pay out larger so you can get a higher payout for a smaller reward. For instance, just the other day I was able to turn $60 into $1,000, right? And that was just buying one. That was only risking $60. Now, anytime I tell people, hey, if you're looking to invest, do not invest money or trade. If you're looking to trade and learn to trade, I always recommend doing paper trading first. Paper trading is going to help you learn without actually losing money. I did not do that in the first year or two that I was learning how to trade. I just threw my money in, right? So that's not a necessarily good strategy to go. Definitely learn candlesticks, learn supply demand zones, and try to go from there. But let me make sure that I can enter into a trade and make a little bit of money here. That'd be nice. Yeah, so we're just going to go ahead and buy 2. Now what I'm risking here is $35, but I'm buying 2, so that's $70, right? And I am buying, let's see, I am buying the SPX, place order. So $70, purchasing that now. I would think that, we're probably going to head down to this 393 area right here, or we could see a bounce right off of this trend line. Okay, so trend lines, supply demand zones work. So many people overcomplicate things, right? When it comes to trading. And, I think if you just follow, news, news will typically move the markets. For instance, the war with Russia, it 100% affected the U.S. stock market, right? And it's not really playing much significance now, but, it had something to do with it, right? And yeah, so anyways, another thing, I always look at smaller time frames for entry levels. And then I look at the larger time frames just to see about how far we could actually go, right? I always look at these areas here. The reason why I like this area, because there is this pre-market or post-market gap. So a lot of times what you see here, let me do this. So this is the gap I'm talking about right here, okay? So this gap was created in a pre-market, and they don't always immediately fill, as you guys can see. They don't always immediately fill. Oh, let me take that off, my fault. Boom. Oh, come on. There we go. Okay, sweet. Come on, you got to delete. Dude, what's going on? Oh, okay. Sorry, guys. I was doing like the wrong thing here. It's like I don't know my own charting service. Okay, so look. So this did it on, 2 days ago, right? So this was likely Monday, right? So we had this high wick all the way up. Now we started making our way back down, right? But we have to fill this gap now. So this tells me that we're going to be heading lower. How low? I don't know, but that's why I draw my lines out. Typically what I like to do is I like to set alerts, right? This charting service, I really do like it. Again, if you'd like to get $30 towards your charting service for your first month or anything like that, towards your subscription, I always recommend just doing a yearly subscription, because you're typically going to pay, 100% you're going to save a lot of money. You save nearly 50% of what the actual price that you would pay over the course of the year if you just did monthly. But if you're only able to do monthly, I would recommend, this is the free version, right? Well, my fault. They have a free version. I typically do the premium, but you don't have to do the premium. If you just keep it super simple, there's no reason to overcomplicate things. But again, like I said, so these were some key levels of support. So you see how we keep coming back to retest this here, and we're getting those high wicks. Anytime we get those high wicks, meaning you see this red body right here, we have this high wick. That tells me, again, that buyers were trying to push the price higher. However, they were not able to succeed and sellers took over, right? So when you get multiple just like that, or you get some indecisiveness, and we have a couple of indecisive candles like this doji. This is probably more like I would say it's just a long spinning top candle. However, I'm still very confident that, when Powell comes up to the stand to start, opening his mouth about how crazy the economy is going to be, moving forward and what the plans are, this thing is going to come tumbling down. And because and again, this is just the S&P 500 ETF, so ticker symbol SPY. This is SPX, right? And this is very interesting. So as I mentioned earlier in the stream, one key kind of indicator that I like to use is the moving averages. I use the 5 moving average, the daily 5 moving average, the 20 moving average, and I use the 1348, 13 exponential moving average, so the EMA, and the 48 EMA. Those will typically kind of tell you what some things are trending on, and I like to look at them from a higher time frame. You look at them on the lower time frame to just kind of catch an initial move, and this is just for basic day trading or swing trading. But if you're looking at them from a larger time frame, so again, this is the 30-minute chart right here. So each candle is a 30-minute candle. You can see that it crossed down, and what happened as it started crossing down, we had some downward pressure. As you see back here, as it started crossing up, we had some upward pressure, meaning some buying momentum, right? So I just kind of use those just to kind of have some indicators. Anytime it happens on the larger time frames, I know it's a continuation, right? So the hourly. Look, we're about to cross down on this hourly. So what that tells me is we can either come here, and this could just be a complete fake out, or we come back and we retest this level right here, this 393. We could see some small, bounces back up, but I'm almost confident we see that today. As a matter of fact, if you just look here to the right, that 13 EMA, which is this green line here, is already underneath the 48 EMA. So unless we get that push up to the 400 level, which I think it's a possibility that it could happen, unless we get that push up, we're just going to continue on down. Right? And so again, this is where I talk about where you can leverage if you just study and you apply yourself just to knowing the basics, supply, demand, candlestick patterns, chart patterns for goodness sake, right? So let me show you guys. I took some pictures of some charts that I just kind of, and that's the other good thing here is that I did this on February 27th. So there's no way that this could be right now, right? I don't even have much showing on my chart, right? So I took these pictures on February 27th, some screenshots from the charting service, and it's crazy, right? It didn't happen exactly, but I had to readjust my levels, right? I had to readjust some levels because they were, what I noticed was that I was usually right in the move. However, my levels were maybe about 30 cents to $1 off. So sometimes I would miss that initial movement. From preparing, I would just sit there and I'd be like, yeah, no, it's got to go up here. Sometimes it doesn't always happen, right? So I was very mindful of that. And this is the chart that I took a picture of. And I'm going to just show you guys here, but I'm going to zoom it in. Okay. And let me transition to the main screen, and I'm going to pull this up right here. So this is basically what I had happening, right? So again, I had this, this triangle right here. So basically what this is this is a symmetrical triangle, right? Now with the symmetrical triangle, typically what you can do is it can either jump up or it can go down, right? But I also anticipated that a possible head and shoulders pattern could happen. And I was waiting for that rejection because I know that when we got to this point, we had a lot of rejection points. As you can see, rejection here, rejection, then all the way down. We got up here, I think that's when we got up to $419, right? Rejection, right? Tried to come back up and retest, couldn't get that high, it exhausted. rejection, boom, right? So this is February 27th, right? I had this going up to 409, 410 just because there was a gap right here, okay? But I readjusted these levels. These aren't the same levels. I readjusted the entire chart, and I had it going to 407, 408, okay? And I had taken this picture just kind of as a point of reference, just to kind of keep moving, right? And I know it's probably a little complicated, but let me go back to the chart. And if we're looking at it from a daily perspective, what happened? Let's look at the daily, right? What happened on the daily? We rejected, boom, boom, head and shoulders. It doesn't have to be perfect, but, you know, like I said, I always look for certain levels to make sure that we are not in a bounce zone. And, you know, this looks like it could be a potential bounce zone, and we could head back up and go reject at that 408, 409. It's very possible. But with the way that this is looking on the daily and how the hourly 1348 is already starting to cross down, I'm going to kind of say that, you know, we're probably going to get a bounce maybe here at 388, 390. Does it happen today? I have no clue, guys. If you guys did like this video and you would like for me to post more content just like this, be sure to give the video a like. Subscribe to the channel. Again, subscribe to the Vibe. I really appreciate you guys. I'm going to go ahead and cut the stream, and if you're able to watch it, I hope that that you guys really enjoy this. And you know, if you're here and you're just joining for the first time, just be sure to subscribe to the channel, set your alerts. I will be doing daily live analysis at least once or twice a week, and it'll be in the mornings just like this before market opens, and we'll try to you know, try to show you guys some setups, and also I'll be posting content on what I believe, you know, some of the best investment strategies are, and you know, what I'd like to do is I'd like to get some interviews with some people who provide you some valuable information into how to set up like your future portfolio, how to get into real estate investing, things that are going to level you up, right? As you guys can see right back here, it says level up. I believe 100% that my purpose here is to help people, and it is to help people level up, right? And so that's what I'm doing here today. I haven't posted in forever. I used to have a channel that was, well, the channel used to be based on credit card rewards. And, you know, the one thing I found was that I wasn't really passionate about that. I was showing people how to game a system that was geared around them spending money rather than making money, right? So now what I'm doing is you could still leverage those old videos if you'd like, but the idea is to help you guys elevate your lives, right? Get away from the rat race, get away from the 9 to 5. You know, go buy a fourplex, right? Live in one unit, rent the other 3 units out, right? House hack it, live in it for a year. After a year, pop out of that other unit. Now you have 4 units. It's basically like having 4 houses, right? When the market starts to turn down, you look for buying opportunities. Everyone is fearful. That's when you start buying. Okay. So again, guys, if you like the video, it's going to help me out. I'm going to continuously start to post now. You know, I was waiting for the right time, and you know, the right time to start is now, right? There's never going to be a perfect time to start. And, you know, I wanted the perfect setup and things like that. As long as I got my streaming software, I got good sound. I got, you know, 3-4 monitors around me. I think we're good. And what is happening here? So we're on this hourly. Okay. So you see guys here, we have some indecisive candles. This candle right here, however, I think that's the most telling candle on this hourly. That tells me that we're likely heading lower, right? And I'm 100% good with that. The reason why I love options is because, sure, they're risky, but that's only if you don't know what you're doing. That's only if you buy same day contracts. That's also only if, again, you get greedy. A lot of people get greedy. They don't know when to sell. thinking they're going to make $1 million in one day, which is unrealistic. You have to set realistic goals, especially in regards to trading. I'm going to be, doing some financial education. Like the one thing that I find is that anytime I interact with somebody and I try to have a conversation about what is going on in the economy, they kind of look at me like, oh yeah, oh okay. That tells me they don't know what I'm talking about, right? So I want to put this out to the masses. I know there's a ton of people that do this already, but I love doing this. Like it is 100% like a passion of mine. Like I don't know what it is, but it's something about helping people live better lives by making better financial choices. The one thing that schools do not teach is financial education, unless you're going to a private school, right? But how many people in the world are actually able to afford going to a private school? Not many, right? So that's why you see the majority of private school kids either on crack, mind you. No, I'm kidding. They're either on drugs or they're succeeding. And the reason why is because they have a different education than what is given in public schools, right? Another kind of, I would say, culture that is out there, and it's heavily like promoted, is being like the consumption, like the overconsumption of useless shit, right? You go buy something because you saw somebody sporting it on Instagram, right? Or you saw them sporting it in real life and you're like, man, I work hard. I deserve to buy myself something expensive. No, you deserve to make better financial decisions that will set you up to just continuously make money without you doing a thing. You can make money in your sleep. Then once you've worked that hard to a point where you're able to set yourself up to do something like that, that's when you can buy yourself something expensive, right? So if you look at your money and you see your next check coming in, which is the 8th, so you got about 7 days until the 15th comes, so most people are on bi-weekly paychecks. Start looking at ways that you can invest that money so it can make you some money, right? I put my buddy on to some stocks. He has no clue what he's doing. I put him on to one stock in particular. I said, put $100 in the market. That's all I want you to do. I put him on a penny stock, okay? On a penny stock right now. And I still think that it's got some potential, right? But I'm going to show you guys what stock that is. And it's this one. It is Troika Media Group, right? And this is, I'm not promoting this, right? Because we sold yesterday at the top, okay? But we bought down here at 28 cents. We bought down here at 28 cents. He put $100 into the market at 28 cents. He had about 500 shares, something like that. I don't remember exactly. But it went up. He made 150% of his money in a couple of days. So he bought down here, 28 cents, rose it all the way up, took it all the way up. About a week, he was up 175%. Sorry about that. And he was just mind boggled. He's like, whoa, this is fun. I said, yeah, it's fun when you're making money that you didn't have to spend hours a day working for, right? I mean, would you rather learn a skill this year, build yourself up, become a fucking expert at this shit, right? Have people looking at you insane. And have more time for your family, more time for things that you actually want to do. Focus on your health. How many times do you go to your 9 to 5 and you're dreading this shit? You're just like, ugh. You have to factor in what time you have to go to sleep. If you don't go to sleep early enough and you have to wake up at 7 just to get dressed to go to a job at 8 or 9 that you absolutely hate, right? Like, what's the good point of that? Like, I mean, we've been kind of conditioned to this consumers culture based off of, hey, like work for a living, like, hey, let's go, Let's go make some money for somebody else's dream, right? Why not try to do something for yourself? I challenge everybody who's watching this stream right now, work on something that you're extremely passionate about. If you don't know how to get into it, start researching it. There's tons of people who are probably in it, who have already done it, who are teaching it, right? This is exactly what you guys can do. Okay, now we're going back here to the S&P 500 chart. This gap, in my opinion, needs to be filled. Still hasn't been filled, missing it by like a couple pennies, okay? There's a lot of indecisiveness right now, and that is because Jerome Powell is about to speak. Now, I said we could possibly get a bounce. I'm taking advantage of some options to the downside. That's just because what I believe, right? Now, I don't win all the time. I'm not a perfect trader. I never said that, right? I'm still in a learning process to trying to refine my own strategy. However, I have come up with, and most traders will tell you this, I rarely day trade. I try to do more swing trades now, which if you're not familiar with any of the terminology, again, I'm going to be posting videos that are teaching you the terminology. And, I'm going to get into options terminology so you can understand that better. But when I go into a trade, I never risk what I'm not willing to lose. And again, I bought a far out of the money. And again, this is terminology you may not know. Out of the money means right now, if I were to purchase an option at this 398, that would mean I'm at the money. Out of the money means I'm at a distance that is not near the current price of the stock, right? So out of the money meaning I bought the 393 options, except I bought them on the SPX, so it was 39.35. I bought those, and that's out of the money. So I would need this thing to drop $5 in order for me to make money. I mean, it's going to make money on the initial down move, but with pullbacks and things of that nature, you typically can end up losing all your money. And to me, it was a risky trade. I bought it for today, so it would expire today. Again, these are things I'm going to go over in the channel, and I'm just going to be posting them on a regular. One thing you'll notice about me too is that I'm going to there's something there that people hit rock bottom all the time, right? I believe I hit my rock bottom in 2020. A lot of people could probably identify with that, right? Rock bottom, lost business. Absolutely, probably at my wit's end, right? Starting to go through depression, feeling like a failure, things like that. You have to get yourself back up. You have to keep going. No matter what, the fact that you woke up the next day and you decided, hey, I'm going to try again, that means you're not a failure. You're only a failure if you decide to quit. Keep going. I did that. I do a lot of meditation. It took a lot for me to get here, but I'm so happy at the person that I'm becoming, and I want to share that out into the world, and I want to share this information to people who don't know. So if you're here, if you're subscribed, I appreciate it. Anytime I jump on a live, feel free to pop in the chat, talk with me. I'll definitely respond. And then share out the content. That's always going to help the channel out. I always just feel like it's, I'd appreciate people sharing the content. That's probably going to be the most effective thing. I notice that I keep slouching in this chair. It's extremely high, but let me see. There we go. All right, so we're good. All right, guys, so I'm going to go ahead and hop off. And yeah, I appreciate you guys, and I will try to be back on here. What's today, Wednesday? I'll try to be back on here at least one day this weekend, all right? Other than that, guys, peace out. Make sure, if you want to watch the testimony, all you got to do is go down to today. Let me see if I can pop that up here real quick. Okay, yeah, so I'm going to go ahead and post the YouTube for it, okay? And let me see if I can stop it from making any commercials or anything like that. Yeah, March 8th. So it's actually about to turn on here in a bit. But what I'm going to do is I'm going to post that. This is from the GOP Financial Services YouTube channel. And I'm going to put that in the chat. But I will also put it down in the comment section of the video. Okay, so here it is. If you want to watch what Jerome Powell has to say today about the state of the economy and what the plans are for the Fed and interest rates and, you know, inflation. Again, in some of the comments, you saw that he was talking about disinflation, disinflation is a very, what's the word I'm trying to find right now? So disinflation is it misrepresents, it's not the true meaning of what you think it is, right? So it's a very deceptive term, right? So in your mind, for the person who doesn't know, disinflation, you're saying, oh, disinflation, that sounds like, you know, we're going down. However, that's not what it means. Disinflation means prices still keep going up. They just don't go up as fast, right? Inflation still rises, just not as fast. So always keep that in mind. Anytime you hear some BS, it always tries to give this false hope to the world that, oh, we're in good shape. No, we're not. Let's just be 100% real about that, okay? We're in pretty rough shape in terms of the economy, okay? A lot of things are going down this year, and you know, I've been saying this since like 2020. You could probably ask family members. I might have made a couple of videos back then when I wasn't very educated on everything, but one thing I do is I commit myself to having more knowledge into situations, and you know, that's the reason why I hadn't really posted much. And so yeah, I mean, yeah, guys, I wanted to make sure that I was able to add value to the people who are subscribed to me, who, you know, want to watch. I do have to take care of some things, you know, so that's the reason why I'm going to hop off now. And, you know, oh, look, there we go. Look at that. There's a rejection right before your eyes. As you're watching, there's this rejection. And why? Because it happened the same time yesterday. Look at this. 9 o'clock. It is 9:01. It is 9:01. But look, this is a bounce. This is a bounce zone. Again, like I said, it's a possible bounce zone. But if we come all the way through, oh, baby, my account is going to look so good. You know, and I bought 2 contracts at $35. So let's see what that's at now since it's dropped, you know. Who knows? Let's see. Nice. So I'm up 15% on that trade so far, right? So cool. I'm good with that, right? I also bought a put option yesterday. Bought it for $6. Not much, but if this thing wants to just go ahead and you know, boogie its way on down, I'll have a decent day. You know, again, guys, I'm not like the greatest trader in the world by any means. But I've had a couple of days where I've had really good days. My biggest day trade was $33,500 in one day. If you go back and look at some of my videos, I played some options on AMC. $500 turned into $30,000 in a week. I've had some luck, but now I don't want it to be solely based on luck. I want it to be on solid analysis, technical analysis, all right? But yeah, so again, see, I said this is a possible bounce area. You see how it's fighting a little bit. This is the 1 hour chart. So what I'll do is I'll always go to see what the 5-minute charts are doing, right? This is a shorter time frame. You know, it's already rejected. You know, it's very possible that we go ahead and head on down, right? Look at the 30-minute chart, but you see this big wick to the bottom. It's very possible we come back up to this 400 level. Very, very possible. But with Powell coming up to speak here in a bit, who knows? Who knows? because the senators, they grill them. I mean, if you go back to the beginning of the stream, you're going to see that Jerome Powell is getting grilled 100%. Talks about the unemployment rate, how unemployment is at a 50-year low, but our debt is at an all-time high. The amount of money is at an all-time high that we've printed, right? Goodness, I mean, there's just a ton of things. Like, I mean, inflation hit a 40-year high. We've had higher inflation. The last time we had this type of inflation was 2008. So always, guys, just be prepared. You should kind of be drooling right now, because soon enough there will be solid buying opportunities for stocks, for some solid dividend stocks, for real estate. Everything is going to be up for grabs, right? So you guys just be mindful. I will see you guys again, and just be on the lookout for my videos. And I really appreciate you guys. Peace, love, be good people, right? And